Wow, that is a lot of money. Look at that chart, 10.58%. Actually, it looks like it's accounting for the base amount of cash. It doesn't just consider what I traded. If you just consider the amount traded, that's 33% return. Holy, that's a lot of money. That actually beat the S&P 500 by 6 times. That beat tech. I did not expect it to grow this fast. If I'd sold covered calls, I probably would have been even higher, maybe 35%, 36%. Electric vehicle stocks have been taking off for a while now. I've made several videos about various electric vehicle startups. I'll have a link in the description to that playlist. So many people were bullish on these stocks. A lot of people think EVs are the future. If you can launch a company and talk about electric vehicles, people will just throw money at you. It's kind of crazy some of the spikes we've seen on even smaller companies. So I wondered, if I was an EV Super Bowl and bought 100 shares of each of these EV companies, would I make money? This trading platform is called Webull, and it's got a super cool feature called paper trade. Paper trading essentially lets you make an account with any amount of money you want and trade with it to see the results. Obviously, this isn't real money, but it is the real stock market. So it's a great tool for seeing how experimental accounts or strategies would pan out. I've actually really enjoyed Webull. I use it a decent amount as a secondary brokerage. If you want to sign up and get 2 free stocks, I'll have a link in the description. It's pretty nice to get free money for just starting trading. So I made this paper trading account, the Electric Vehicle Super Bowl. I bought Archimoto. I picked up this blank check company, which is going to be purchasing an EV manufacturer. I bought AYRO, NEO, Electromechanica, Workhorse Group, NKLA Corporation, and Tesla. At the time when I purchased these, I got 100 shares of each, and it totaled up to around $160,000 for 100 shares of all of these. And these are the average prices, obviously. The resulting graph is really crazy, especially when you consider if you take the percentage increase from that $160,000. I put a lot of money into the account, but I didn't spend it all. The actual percentage increase would be 33%. That's really just insane. I could have also bought these shares by splitting up things into maybe $100,000 and then buying $100,000 of each of these stocks. That would have been another strategy, but generally I feel people put a lot of money into bigger companies and then experiment with smaller amounts of money on smaller companies. I bought all these shares on July 16th. If we go to my orders placed, you can see they all ended up on July 16th or 15th, meaning it's just been 35 days, which is almost a percentage increase every single day. To put things in perspective, on July 16th, the S&P 500 was $3,215, and on the 19th, it closed at $3,374. That's just under 5% growth in that 35 days. The tech-heavy QQQ ETF on July 16th was $259, and it closed at $276 on August 19th. That's around 6.5%. Apple grew from $386 on the 16th to on the 19th being $462. That's a whopping 19.88%. Amazon went from $2,999 to $3,260, or 9.92%. Granted, stocks moved a decent amount today, but in general, this account outperformed almost everything. Let's take a closer look and see which are our biggest winners and our biggest losers. Under positions, obviously this account was really carried by Tesla, a 36% increase, and that's where most of the money went. That's pretty huge. Tesla has simply been blowing it out of the water. It's honestly astounding how much it's grown in such a short period of time, and you would have beat this account if it was all in Tesla. It would have done better. It would have been 36 instead of 33. But these other companies also did pretty good. Archimoto at 13.64. That's beating QQQ. Not Apple, but that also beats Amazon. The blank check company for the trucks is 17.75. That's pretty huge growth. Again, beating big competition other than Apple. AYRO has actually plummeted a huge amount. It's the largest decrease so far, at minus 30%. NEO has grown a very small amount, 4.77%. Electromechanica has also made a huge drop at 21.35%. That's pretty significant. Workhorse Group has made a small amount of growth, a steady 2.1%. And NKLA Corporation is our second biggest loser, a huge dump of minus 24%. Overall, I feel like a lot of these companies have potential. I've done a video on most of them, but not all of them. I would say NKLA I'm really not a fan of. A lot of the fundamentals of that company just really don't make any sense, and I'm not surprised it's dropped such a large amount. Electromechanica is fed a lot on the hype with that huge bump. The stock was trading pretty high when I bought it, based off hype. And it was a similar thing with AYRO. I think AYRO definitely has potential, and maybe even Solo as well. They both seem pretty dedicated with going forward with electric vehicles. It's something they seem to be taking seriously, but Solo isn't actually distributing vehicles in a regular commercial sense, and both were affected by a huge electric vehicle hype. Although if I'm entirely honest, even with the released earnings data, I'm surprised there's such a huge disparity between a lot of these smaller startup companies. I could have made a lot more money if I dumped the companies that I really didn't have much faith in, like NKLA. But, again, I just wanted to emulate an EV Super Bowl who just bought 100 shares of various stocks in the electric vehicle space. I could have definitely made more money, probably 36% if I sold covered calls, but you risk losing your biggest winners if you do that. Some of these have had tremendous jumps, especially Tesla. And even if you're selling your covered call at $2,000 strike price, you still would have lost that. I mean, granted, you could go very far out of the money, but at that point, you're not really generating much revenue at all. Overall, I had a lot of fun with this. I'm not necessarily recommending you do this to your account, but it is crazy to see how some of these EV stocks have just blown up, and that if you just blanketly threw money across the market in the EV sector, you would have made money, at least right now. It'll be interesting to see how these companies progress in the long term. Some of them don't seem maybe that great. Others seem like they have a lot of potential. But this is how an EV Super Bowl would have ended up. It's pretty good, honestly. That's a massive increase. A lot of it carried by Tesla. But even if you put money into Archimoto or some of these other companies, you wouldn't have lost money. Although in some cases you would be making less money than just putting cash into the S&P 500, but possibly opening yourself up to higher growth in the future, depending on how contracts and other things move with this stock. So I wanted to ask, how did this account's performance compare to yours? I suppose if all your money was in Tesla, it would have beat this account. Did you do better or worse than 33%? I'd also like to make a series of this. What do you guys think I should do with this account? What should I sell? What should I buy? What sort of plays do you want me to make? How do you want this account to progress? Is there anything I should be buying, selling? Leave a comment below. Anything goes. I'd be happy to mess around with this account and see what interesting things we can get out of it. As always, have fun with investing and personal finance.